everyone. My name is Uday Kumar Mopatti. Today my topic is about corporate and financial accounting. My abstract is about corporate accounting considers effectiveness with reliance on efficiency. It determines feasibility that recognized for a couple of thought that used in financial work and calculation. Furthermore, it also shows the effective benefits of accessible payment and elder charges. Along with this, it is also demonstrated charges costs that are generally procured in the financial report. In the consideration, complexities are also taken in the manner with the perception for business development. This is based on the International Accounting Standard. It is also said to be IAS. And the treatment of income tax and other taxes in books of accounts and financial statements. Corporate accounting is one of the important tools that are related to uncommon aspects that provide a relationship in different record items. In this way, a proper review of cash considered that is related to the consequences of the enterprise. Furthermore, it is also includes the maintenance amalgamation of business. This report is based on the National Australian Bank, which successfully deals in ascertaining the desired level of results with different associations in the country. This enterprise is formulating in different kinds of service to attract customers of Australian with the developing more effective results. In this consideration, the present study demonstrates an understanding of different terms that are related to corporate accounting. It is also determining to understand for deferred tax assets and liability. Moreover, it includes a discussion of tax expenses of the firm, which includes in the latest financial statement of an organization. The company had a strong performance in the year 2019 and the company is constant investing in $1 billion in climate related project and also Australian $10 million for the digital future in the country. There are 7 terms related to corporate accounting. Accounting profit, the amount of net profit or loss as reflected in the financial statements as prepared by the company in a year is said to be accounting profit. Taxable profit, the amount of profit or income on which any individual or entity is liable to pay the income tax to the government authorities is said to be taxable income. Temporary difference. Taxable temporary difference is created wherein the accounting income is higher than the amount of taxable income as calculated with respect to the income tax laws. The opposite of the taxable temporary difference is the deductible taxable. For example, for the deductible temporary difference is the amount of bonus not paid in the current year allowed as deducted only in the year when it is paid. Therefore, it will not be added back in the calculation of the taxable income, therefore paying higher tax in the current year and will be reversed in the year when the same is paid. There are 2 types of temporary differences, the taxable temporary difference and deductible temporary difference. Permanent difference. The amount paid as donation in cash is not allowed as deductible expense in the current year and will not able be followed in the future years as well. Therefore, the amount of tax paid is more than the amount of tax on accounting income. The corporate law allows some expenses to be deducted from the income, but the same is not allowed in the income tax laws either in the year or the future years also. While studying the annual report of Rio Tinto Limited, the recognition of both the deferred tax asset and the deferred tax liabilities was done, which is generally netted off against each other in most of the cases. Similarly, the amount of tax payable and tax recoverable were also recorded separately. The reasons for certain of both the deferred tax assets and deferred tax liabilities has been shown in the notes to accounts part of the financial statements along with the comparison with the previous years as well. The disclosures is consolidated financial statements as required by the standards as mentioned have been followed and thoroughly explained as well. The detail of all the working and operation has been mentioned and the accurate calculation of income tax has been shown. In the financial position of the business, deferred charges of assets and liability consider net effectiveness in the terms of declaration of financial position. There are different substances define choice in a set of certain obligation and the assets and liabilities that are shown in the current perspective. In addition to this, the structure is a huge bit shown in the financial synopsis. It defines considered changes when generally books are closing. It is also seen as affirmation in the complexities that occur at the workplace. It concludes that the present report analysis, it can be stated the assessment of obligation rates depict progressively outcomes. It is also shown the positive relationship of association in finishing up of the methodology that is determining appraisal. Furthermore, there are the failures also demonstrate meet with the obligation in a particular given period that impacts a molded relationship. In the Australian market, duty assortment officials also made with the elder charges related to the given basic positions. It shows light up differential values. The amount of taxable income is calculated with respect to the income tax law and the amount of accounting is calculated as per the corporate law. The amount which is calculated in profit but using two different laws and thereby two different amounts will be concluded. If the amount of taxable income is more than the accounting income, the tax paid in the particular year will be more considering the difference can be reversed in the future years. The amount of tax paid in the current year will be more in the current year and therefore the excess tax paid will be recorded as the deferred tax asset. The opposite of the above scenario will lead formation of deferred tax liabilities. The company Rio Tinto Limited is based in the both UK and Australia, major due to which there will be a huge exchange rate mismatch resulting in difference in tax amount and the rate of income tax in both the countries is also different which may lead to higher payment of tax in one country and lower in the other countries against causing difference in the amount of tax expenses and thereby recognized tax repayable or recoverable. These are some of the references which I have taken for my assignment. Thank you for paying attention for my presentation.